to the TMT Daily Strategy video for Tuesday, January 19th. All right, traders. Well, I hope everybody enjoyed the long weekend. We had an extra day off yesterday, which was great. Nice to have that extra day. We don't get too many here when you're trading on Wall Street, but nonetheless, we did get it. And Friday, we had a little bit of weakness, and we had some bigger bank numbers report. You know, I like the bank sector a lot. I think the banks now are, as they reported, they probably will start backing and filling. If not, I want to see some of these key banks. If they start reversing, that means they're going to start taking some profits. But we'll see. It's still early. Futures are up on Yellen's speech today. So we had a couple of days lower, very small, and then we ended up hitting the 21 SMA. I'm going to show that to you on the charts on the spiders. And then now we're going to bounce again today. So inconsistent downturns. We always had 1 day, 2 days, and then we run right back up again, if that. So I want to talk about where we will get to, where we're going to get in our pullback if we do get the pullback, which we will. It's just a matter of time. And I want to get right to it. Let's get right to the charts here. Let's take a look at that 10-year. That's going to have to be on our mark here now. Right now, apparently, the markets are not worried about the 10-year elevated as it is. And again, when it gets up right around that 1.25, 1.15, right in that area, which we are right now, that 8 is kind of holding that price action in the TNX. That's when we got to start looking to see if we're going to start to rally again. Okay, remember, logically, we had a 5-6 day move back. It's normal to have a pullback. I understand people don't know what a pullback is in this market. Basically, really since 2009 lows, we've been continually moving higher, and Fed is just continually creating these asset bubbles throughout these different asset classes. And I just think that the one day this bubble is going to burst in a big way. But we want to look at some red flags. We have a lot of red flags in the market again. Doesn't mean that you have to sell. It means that you may be very patient and wait to see what is going on and what's going to happen next. Now, we have a lot of uncertainty going on. We have the inauguration. We have a slew of earnings this week. So this market is definitely going to be moving one way or the other, okay? So here's the TNX, very bullish. We broke out of that ascending triangle. As you can see, this is the top half. This was the bottom half in here. So we broke out, pulling back here, very bullish, meaning this is not good for a good sign for the equity markets. Here's the VXX. Just to show you where we are. Again, we popped up a little bit on Friday, but still kind of just carving out a bottom here, right around that $16 mark. Remember, next move, if we do break lower and we get a lot of, let's say, more euphoria of buying, then we're going to be looking to break past below this 16, and that's when we start looking to buy down below that 16 mark. And then dollar cost average that long trade as we anticipate a nice big move in the VXX. Now, I do anticipate a decent sized pullback in the first quarter. It could be maybe the second quarter, but as of right now, I am looking at a first quarter pullback. Where does the market go? When we do pullback, it all depends on what the catalyst will be for that pullback, right? So here's the spiders, and let me bring this up here because we already know that where we are in the March lows. Just want to bring this up so you guys can see this a little bit better. We caught that 21 SMA again, as you can see here. Let me just bring this up a little bit more. There we go. All right, so we caught the 21 SMA. Had a small little 2-day pullback. Meaningless, absolutely meaningless. Nothing happened here at all. Caught the 21 again, just like we did here and just like we did here, right? And now we're going to be back up again, probably reversing this Friday's reversal. And we'll see what Janet Yellen says, right? You know, Janet Yellen loves to pump up asset bubbles. She's pretty big on that. And that's what's going to happen here yet again. So we'll see what happens. This is going to be a very interesting week this week, okay? Banks, again, looking pretty good. They're up again. They all beat, which is great. But again, guys, I do like the banks. We're going to talk about that towards the end of the segment here, okay? But you can see the 21 SMA remains big time valid here. 372.72. That'll be your first area of resistance, support, excuse me. Once this breaks, we'll start looking for pullbacks and looking for measured moves when we pull out Fibonacci retracements, okay, as right now. I do have small area of resistance here at the 380, let's call that 380.35, 380.50. That'll be the next big area of resistance. Here's the Qs. And you know, we talked about big cap tech. I'm not gonna get on my soapbox. The Qs did break below, but it's going to bounce again today, so it's basically going to hold. That's going to be a decent spot here. That 311.40, 311.50. All right, that's going to be your next area of support. Obviously, down below here, 302.79. That'll be your area of your next area of support. But remember this thin zone. Remember this. This is going to be a really big area. The big important area for these Qs are going to be these two areas that we have these gap areas of support, and within the gap area of support, we have this little sideways consolidation for the last couple of months, September and October, and then we gapped up and then went higher again. Right? Very similar price action like we did last year. Okay, just as last year, if you remember, we had just a nice big rally up, and just not last year, but this looks like last year's price action, as you can see. Then we roll back, and then now we're looking to do the same again, and we continue to monitor what's happening. Remember, until we get the trigger, right? We get the signal, and then the trigger. We're not going to do anything on the short side. We will continue to ride this price action, this extreme price action, and that's exactly what it is: extreme price action. If you think that none of these, there's an asset bubble in pretty much every asset class. Here's the Russell 2000. If you think that the Russell 2000 isn't overextended, take a look at this again. Very overbought. Okay, MACD RSI, and now we're sitting on the 8 here. We had that little bit of move. Now we're back on it. 21 SMA, 201.56, big area of support in the Russell 2000. Just to let you know, keep that in mind here. Okay, let's take a look at the diamonds. Right, and the diamonds here caught that 21 SMA, and that's going to be again another big area of support, 305.55, and then we're going to be running right back down to that 298 area. But remember that diamond, we're going to watch this area here. This is a very important area. This coincides beautifully with this big open area of a draft here, where I think the market's winning. We do get that sell off. We'll start to roll right back down again, and then catch this area, and then we'll reevaluate. You know, here's the transports, the IYT, and again, you know, this is our main leader. Okay, wasn't really leading here pretty much all of December, but then again, now we pop back up again, and we're just holding steady here at the 203.27. That'll be your next area of support, 203.27. Okay. Now, I really do like gold. I think gold is a great asset, but I don't think the asset is going to be doing anything much. I think we got to pay attention to these gold miners. We'll get into that in a moment. But you see, gold broke below the 200-day moving average, and if we get any type of movement, remember, it's a safe haven place. So everybody should own gold in their portfolio. But I do believe that now we broke this here. You see this area? Now this thing should flush all the way back down to this area here, right around that 150, 163, 160 area, all the way back down to this area here. Okay, and that's where I think that should happen, and then we would reevaluate it. But if you look at the GDX, and I'll just take a couple of key miners, you could see that. See, this is something that the miners miners follow, and the metal follows the miners. So when that happens, I think gold is going to be in a great place. Not at the moment, but you look at the bigger ones, Newmont Mining. Right, this is the GDX gold mining ETF. You could see these are holding up pretty well. What we need to really watch some of these, because I'll be watching a lot of these names for our coaching subscribers, and we're going to be looking at this sector in a big way. And I do think that this is going to be one of the bigger plays yet again. Okay, now I just want to take a look at the XLF, and you can see this is the banking ETF. Has banks and financials. I mean, very extended, right? I mean, if we had something like where we were, I mean, here's the March, right? There's the March highs pre-corona. We took that out, and we got everything back from down here from the March lows, and then we went sideways for about 4 or 5 months, and that was basically in a nice pennant, right? And that's when I started saying I like these bank stocks here, guys. And then many of you bought some of the bank stocks, and the money-centered banks such as the Citibank, the Bank of America, J.P. Morgan, even Wells Fargo, the worst run bank in the country, started to do some nice things here and started really pushing through. The only thing is, I don't like it anymore in the short term. In the long term, I do like the banks. I like the banks in the long term. I do not like it here in the short term. We need a major pullback. What I'm saying is we need a pullback in the market in general for everything. There's everything overboard, and I do like the materials, and I do like the energy sector as well. But again, unless you want to pick something that you haven't seen, you could see this just grossly overbought materials. And here's the XLE again. Those are the top three sectors yet again last week with financials and not just the financials, excuse me, but the bank sector and the industrials. So this is where I'm saying here. These are some gaps that are going to need to be filled at one point. So why put money to work? Even if you have to wait 2 3 months, let it sit, see what happens and where we go before we go into the next phase. Plus, we know we got a new president coming in. We want to see what his policies are, and obviously let him get into office and see what he's doing. I mean, and talk about the energy sector. You know, he was pro clean air. You know, clean energy. Excuse me. You know, is that really going to change much? Is he really going to do push that? So we had some of these solar names come in. Let's just take the big one first, solar basically, and you could see from when you could see when he's when pretty much he's winning, the market just really rallied hard. But now this is again overextended. There's not one stock that I don't see that's overextended without a reason for it to be down. So be patient. Let's ride the course here, right? Stay the course, and then we will be fantastically fine making a lot of money. But this is where we are. This is where we're going to get at. Again, for our coaching subscribers, please send an email for your next coaching session, and we'll be putting out a short list when the time comes for the short list. And then when that pullback does happen, we will be putting another long list, another Corona post Corona portfolio as well. And then some of these sectors, the XLE sector, the energy sector, and the gold sector, we also be pulling out some great opportunities as well. Like we had a very very successful tax selling at the end of the year. Gave a bunch of stocks, and a lot of the guys did very very well. All right, have a great day, guys. We'll see you tomorrow. Take care.